We were discussing number 3, receiving a debtor from 15,000, receiving from a debtor 15,000. So the answer is 15,000 cash coming in. From where we collect the cash? Receiving from a debtor. Debtor, who is a debtor? Is it liability? No. Debtor is what? What is debtor? Apsara, what is the debtor? Naveen?
Liability.
The one who
Wrong. Asset. Debtor is asset. Creditor is the liability. So 15,000 minus that is debtors. Right now you are confused with the debtor and the creditor. I said that when you do the credit sales, then the debtor will create. When you do the credit sales, then the debtor will create. The debtor or the trade receivable is an asset for you. Think. Right? When you do the credit sales, a debtor will create or the trade receivable will create. It's an asset for you. It's an asset for you. Then when you do the credit purchases, a liability will create. When you do the credit purchase, a liability will create. That is the creditor. Don't confuse debtor and the creditor, even in the exam. So debtor is asset, it's a receivable. Creditor is a liability, it's a payable. We have done C. Think of D. Paying stationery expense 5,000. Just think. D. Paying mean what's going out?
asset
Very good. Asset. That is, what is the asset?
5,000 rupees.
Yes, 5,000. What is that asset? Cash. Your payment cash will come down. So when you make the cash payment to the stationery, stationery is what? Expense. Stationery is expense. Then the expense increases mean profit will come down. Profit come down mean like equity will come down here minus 5,000 by it is expense. It is expense. Stationery is expense. We have done the D. Think of E. We will practice more question. Think of E. Just think. Selling a stock of good with cost 10,000 at 15,000 on credit. What is the impact? Apsara, think.
Asset increase.
What is increasing?
Asset
What is the asset?
cash.
No, incorrect. Increase 15,000. It is not the cash sale. It is not a cash sale. What is it?
Stock.
See here. Credit. Credit mean not the cash, it's debtors. Debtors increase, correct. What's going out? Naveen?
Stocks.
Very
10,000.
good. Minus. Very good. Minus 10,000 stocks. Very good. So 10,000 stocks you are selling at 15,000 mean you have made a profit of how much?
5,000.
5,000. Where to add that profit?
Equity.
Very good. Plus here 5,000. That is profit from the transaction. Right, done. It's done. Right, which we have done. So before we continue the same session, I just wanted to do a small exercise. We have 4 type of accounts. 4 types of accounts, or we call elements. Elements of financial statements. We're having 4 types of 4 elements, 4 type of accounts. So number 1 is assets. Then liabilities, then capital. In addition to these three, we have two more. One is income, the other one is expenses. We have, remember, four types of accounts: assets, income, capital, expenses. Right? So I'll give you an exercise. State the type of account for each of the following. I'm giving a list, a bigger list. You need to state the type of account. For example, I would say cash in hand. What is the type of account, Naveen?
Asset.
Huh?
Assist.
Huh?
Assist.
Assets. Very good. Then cash at bank. What is it?
Liabilities.
Wrong.
Assist.
Yes, our cash in the bank account. Assets. Then stocks.
Assets.
Assets. Very good. Bank loan.
Liabilities.
Very good. Liabilities. Then owner's investment.
Capital.
Very good. Owner's investment. Capital. Then debtors.
Asset.
Assets. Creditors.
Liability.
Very good. Bercaja karena galing. Liabilities. Then land and building.
Capital.
No, wrong. Land
Assets.
and huh? Land and building. What is it?
Assets.
Assets. Land and building assets. Then motor vehicle. Motor vehicle.
Assist.
Assets. Then sales. Different one. Sales. What is it? Think carefully.
Asset.
Sorry?
Asset.
No, wrong. Think. Sales is what for us? We have five: assets, liability, income, capital, expense.
Income.
Perfectly correct. Sales is income. Then what about the purchases?
Expense.
Huh?
Expense.
Perfectly correct. Kami kalian bawa. Wait for a minute. Right. Sales, income, purchases is expense. Perfectly correct. Then printing and stationery.
Expense.
Perfectly correct. Expense. Then traveling and transport.
Expense.
Perfectly correct. Then rent received.
Income.
Perfectly correct. Rent received, income. Rent paid,
Assets.
wrong.
Expense.
Expense. When you pay the rent, just think, Apsara, you are in your house, you are on rent. That is not your house, you are in rent, right? If you are on rent, that rent paid will be what for you?
Expense.
Expense. To the owner, that become what?
Income.
Income. Then loan interest. What is it? Think.
Income.
To whom?
Us.
Why? We have taken a bank loan. We pay the loan interest.
We pay interest.
Yes. Loan
Then
interest
expense.
paid to bank. Huh?
Expense.
Then
Yes,
expense.
expense. Then loan interest paid to bank. Then salaries
Income.
and wages. Huh?
Income.
To whom?
Us.
We are think of the business. For the business, salary is what?
Expense.
Expense. To the employee, that may be income. To the employee, bank charges. For the bank, we are not doing the accounts for the bank, we are doing for our business. Think.
Expense.
Expense. Bad debt. Bad
Liability.
debt. That means we have done the credit sales, we don't recover the receivable from the debtor. We have to write off the receivable balance, we don't recover, then we write off the receivable as an write off. We write off the receivable. For us, what is it?
Liability.
No.
Expense.
Yes, write off the receivable balance. Just think, Apsara, you have given 500 to your friend. She's not making she's not repay that one to you. You're not happy. Finally, you give up that receivable balance. You just write off your from accounts, from your books. That is called the bad debt. It is an expense. Then insurance payment. What is it?
Expense.
Yes, expense. Discount received.
Income.
Perfectly correct. Discount given.
Expense.
Expense.
Yeah, given or allowed, both we use it. It is an expense. Then depreciation. Depreciation. The value of the fixed asset come down. The value of the fixed asset come down due to wear and tear, due to usage. Just think, what is the depreciation? Maybe motor vehicle, maybe the building, maybe the uh, office equipment. The value of those assets come down due to usage. Just think, then the depreciation become what for you?
Expense.
Expense.
Perfectly correct, expense. Right. Now you good at it little bit. One more. Sales return. Sales return, and the other one is purchase return. Just think of these two. Sales return is what? You have done the sales. The person who purchased the item is not happy. They are come to return the product back to you. Person who purchased your product, they are not happy with the product. They come to return back to you. What is it?
Expense.
Huh?
Expense.
No, it is income reduction. You can't say expense. Then the purchase return is expense reduction. Then one more. Drawings. Owner takes goods and the cash to home.
Expense.
Huh?
Expense.
No, it is not the expense, it's capital reduction. Remember, these are very careful points. You must learn carefully. Right? Owner, if take owner cash or the goods to home, that treated as a capital reduction because owner's investment is capital increase. Owners take it back, capital come down. So we'll practice one more question. 2022 we did it. 2020 we did this one, no? No. I am doing the question you are just looking at, right? So this is not the good best way to learn the things. Therefore, you also should work on this question, right? You also should work on these questions, huh? Remember, at home, right? We'll read the total amount of the assets and liabilities of the Raju's business as at 1st Jan 2022 are as follows: motor vehicle, stock of goods, debtors, cash balance, total liabilities. Now see, they have given some assets and the liability. Can you find the capital? Yes. How do you find the capital here? Easy. How do you find the capital here? How do you
Assets
find it? Huh?
subtract from liability.
Sorry?
Assets subtract from
Assets minus what?
asset liability.
Very good. So here you can find capital equal assets minus liabilities. Right, we'll take the total of the assets. What are the assets? More 250,000, see whether I'm correct, plus stocks 140,000, plus debtors 20,000, plus then cash balance 100,000. Those are the assets value minus the liability. Only we have one liability, that is 30,000. Then we'll take the total equal 250,000 plus 140,000 plus 20,000 plus 100,000 is 510. Asset value is 510 minus 30,000, then the liability value. So 510 minus 30,000 is how much the capital? 480,000. Is that clear to you?
Yes, sir.
Yes,
Right.
sir.
Motor vehicle 250, stocks 140, debtors 20, cash balance 100,000. Add together minus the liability. That is 30,000. You get the capital balance, that is 80,000. What they're asking. Following are the transaction occurred in the Raju's business during the month of Jan 2022 impacted on the accounting equation. They have given us some transaction with the dates required. write the transaction with the amount occurred on 14th Jan. So that means third one, 14th Jan, what is the transaction that can be happen? Then what is the amount of equity 25th Jan 2022? What is the amount of equity? They are asking the equity value. 25th Jan 2022. See, they are asking what is the amount of total current assets. You don't know the meaning of current assets. I will explain it. As at 25th of Jan 22, indicate how the following transaction occurred in Raju's business on 31st Jan 22, impact on the above equation. Right, we'll write answers one by one. First one, A, what they're asking. Write the transaction with the amount occurred on 14 Jan. What is the 14 Jan transaction? Just think, what is it? Debtor come down, cash increases.
Received 7,000 from debtors.
That is this one. Apsara, think. What is it?
Received 7,000 from debtors.
Perfectly correct. Naveen, you are perfectly correct. Apsara, understood it?
Yes, sir.
You can say the transaction is received rupees 7,000 from debtors. Correct. Then answer for B. Just think B. What is the amount of equity as at 25th of Jan? 25th of Jan mean after happening all this transaction. After happening all this transaction, what is the amount of equity? So they asking 25th of Jan. 25th of Jan mean after happening all this transaction. How do you calculate? See, opening equity, how much came? Opening equity we have done, opening capital is 480,000. Opening capital is 480,000. Then what other transaction has happened? Here you can see equity minus on 10th of Jan, 10,000. Minus 10,000. Then again plus 25th of Jan, again how much? 10,000. Was it clear? Apsara?
Yes, sir.
Naveen?
Yes, sir.
Right, very good. So see here, opening equity we have done, it's 480,000. That is on which day? This is on 1st of Jan. 1st of Jan you have 480,000. So there is two transaction that has impact on the equity. Decrease by here 10,000, increase by here 10,000. So the net impact is 0. Then again the equity value will be 480,000. Increase by 10, decrease by 10, the same 480,000 will be the answer. Correct. C. What is the amount of total current assets? So I will explain this. Assets you can divide into two. Assets you can divide into two. One is non-current assets. So the non-current asset mean we are keeping these assets for the business purpose, not for the trading purpose. Keep these assets not for trading purpose. Right? Keep this asset not for trading purpose. Then useful life. Life will take life of the asset. Life of the assets are more than 1 year. This is non-current assets. Other one is current assets. these assets here, these assets are keep for trading purpose, life of the asset is below 1 year. So we'll take some examples here. Examples: land, building, then motor vehicles, then office equipments, then furniture and fittings. Those are the non-current assets, or we can say fixed assets. These assets we are keeping for the, not for the trading, not for buying and selling purpose, for the use, maybe for the production, for the administration purpose, right? So the life of these assets are more than 1 year. Then what are the current assets? These are keeping for the trading purpose. That means examples, if we can take stocks. Stocks we keep for the trading purpose. Then debtors. Then prepayments. Then cash in hand. And cash at bank. Those are the current assets. This classification is very important. Here they are asking, what is the amount of total current assets as at 25th of Jan? They are asking total value of the current assets. 25th of Jan, total value of current assets. We'll take the totals. Total value of the current assets. Right. Motor vehicle, can you take as a current asset? Naveen? Apsara, is the motor vehicle is a current asset?
No.
No. Then what else? Stock of the good is a current asset. Then the debtors are current
Yes.
assets. Cash is current asset. You clear? Then we'll take the total. So see, stocks, then we have debtors, then we have cash. Those are the current assets. We'll take the opening balances first. We'll take the opening balances. They are asking the closing balance. B balance brought forward. We are having stocks how much? These are the values. Stocks 140. Then stocks 140. Debtors 20,000. Then cash balance 100,000. These are the opening balances. They're asking as of 25th of Jan. So look at the transaction. Stock has increased by 9, decreased by 15,000. Stock increased by 9,000 and decreased by 15,000. Then debtors decreased by 7,000 and increased by 25,000. Then cash decreased by 10,000. Then here increased by 7,000. Then decreased by 8,000. Right. These are the transactions. Then we'll take the total. here 134, here 38, here 89,000. Right? Was it understood? Apsara? Naveen?
Yes, sir.
Very good. Then the total current assets is equal 134,000 plus 38,000 plus 89,000. This is the total value that comes to 216,000. They're asking what? Write the amount of total current assets as at 1st Jan 2022. Your answer is 261,000. Not hard. It's done. C done. D. Indicate how the following transaction occurred in Raju's business on 31st Jan. Impact on the above accounting equation. We'll write the equation. What is the equation? Motor vehicle. We'll put the number D here. D. Things they have given. Motor vehicle. Then what else? Stocks. Then debtors. Debtors. Then cash. Then equity. Then creditors. Right. What is the transaction? D. This is the D. What is the transaction? Indicate how the following transaction occurred in the Raju's business on 31st Jan 22. Impact on the above accounting equation. Investing Raju's private motor vehicle 300 to the business. Think. How to write? What's coming in? What's going out? What is increasing? What is decreasing? So easy. Investing Raju's private motor vehicle 300,000 to the business. Naveen?
Equity increase.
Perfectly correct. Plus, perfectly correct. 300,000. What else?
Cash decrease.
Cash.
Decrease.
Why?
We are paying for the motor vehicle.
No, we don't pay. Investing Raju's private vehicle. Raju's house, Raju have a personal vehicle. That vehicle they are transferring to the business. No change in the cash. See, investing Raju's private vehicle, very important. Investing Raju's private vehicle. You are receiving a vehicle. But is it change in the cash? No, it's wrong. So what else? Think. Apsara? What's happening? What's coming into us? Motor
Motor
vehicle.
vehicle.
Yes, we are receiving motor vehicle from whom? From the owner. So easy. See the way I am doing the question. If you do like this on the examination, definitely you will get A for the subject. Right? Don't worry, we will practice more question and we'll see one more. 2020. We have done it, no? Same, no? Raj, yes, we have done it. We will do I'll take another paper, little bit hard one. Right. See this one. Not actually much hard, but you can manage. For a retail business, the following transaction will occur during the month of Jan 2024. They have given some transaction. They're asking you to. You are required to state the impact of each of the above transaction to the following accounting equation. Now they have given an equation. So inventory, then cash, then equity or the capital, then liabilities. I wanted both of you to think the first transaction. Just 5. They have given just 5. Right. Think. Purchase goods worth 250 on credit terms for resale. What's increasing? What's decreasing? What's coming in? What's going out? Think.
Liability increase.
Liability increases. Very good.
Inventory
250.
increase.
250. That is creditor. What is the other? Naveen?
Stock increase.
Stock increases. Perfectly
Stock
correct.
increase.
Very good. Perfectly correct. Stocks increases. Stocks are given. Done. Number 2. Can you write? I'll give you 5 minutes. It's better, no? Huh? Take a